What's up, guys? It's Binary Mastermind here with you once again, and today I'm going to be showing you guys a very profitable trading strategy that I've been using for a while now. I'm currently in a trade on gold. As you can see, guys, I'm actually down on gold roughly around, let's have a look, roughly around £40,000. Now this trade was initially a selling opportunity that I took last week, I believe, but the trade just started to go against me around here, so I took an opposite trade to the other side to protect my account. Now it's a very simple system that we use just to prevent ourselves from losing trades. So but then it went back the opposite way, and I closed some of the other trades, which left me roughly around £4,400 in profit. But hopefully this trade comes back up here and it hits my TP. If not, we would have to manage this trade and do what we do in order for us to protect our account. Now most traders will see this loss in their account and they would be panicking and wondering what they need to do. But when you're using a system that makes money long term, no matter what the market does, it doesn't really matter. You have to already accept how much you're willing to risk on a trade before you even take the trade in the first place. And most traders fail to do that. At first, they see an opportunity in their head, they think, oh, they're going to make money on that trade. Now not every single trade makes profit. There is no 100% trading system, but there is a way where you can manage your account and manage your trade in such a way that even if the market goes against you, you can still come out worst case break even. But you need to have the right knowledge in order for you to do that in the first place. Now a lot of people think that if you come in the market and you're new, you can start making money straight away. Well, it doesn't exactly work like that. It takes a lot of time, discipline, dedication, and consistency. You can't just come in the market and start making money straight away. Most people have they trade with their emotions. That's why in this industry 99% of traders, retail traders, lose money. And they lose money because they get greedy. They're impatient with their trades. Instead of cutting the losses quick, they think that the market is going to reverse back and come back in their favor, and 9 times out of 10 the market never does that. It only goes against them even further until their account blows. Now you can easily avoid that if you just accepted the loss from the get-go. If you accepted that loss and just find another setup, you would still make profit long term. The objective is to consistently use a system with a proper risk management in place to keep yourself in a position to always make money long term. Now it doesn't matter what happens on this trade or the next trade or the trade after that. That does not matter at all. The objective is to keep on doing the same thing you did on the last trade, right? If you already tested a strategy and it works more often than it doesn't, even if it works 40% of the time, but you have a good risk to reward ratio, you will still make profit long term. Now most traders fail to do so because of risk management. Risk management is very, very, very important, because without it you can still lose money with a profitable trading strategy. I mean, if we didn't use risk management, you would end up blowing your account. That's why it's very, very important. Use it at all times, especially when you're taking trades in the forex market or any type of market. Because at the end of the day, you want to still make money tomorrow and the day after that and the day after that and the day after that. So it's a long-term thing. You just don't want to make money just for today. There is no point risking 100% of your account on one single trade that was just meant to be a losing trade setup. But the thing is, you don't know which trade is going to be a losing setup, because when you back test your strategy, um, your strategy itself doesn't actually know which trades are going to be the winners and which trades are going to be the losers, right? Let's say, for example, you have a strategy that wins 50% of the time, right? uh, the other 50% of the time, every time you win, you have a win ratio of 1 to 2. So every time you win $2, for example, and every time you lose only $1. So if you was to do that over a sample size of 100 trades, you would lose 50 of those trades, so that's $50 you've lost, and the other trades you actually win $100, right? If you minus the losses away from the profit you've made, you still come up with a $50 profit. Now that's what it is. Now all you gotta do is keep doing that, and you can compound your account exponentially with just a strategy that wins 50% of the time. So you don't have to be always right. Don't have to be right all the time. This is not about being right. It's about a calculated trading plan that has an edge over the market, regardless of what the market does. So there is no need to be emotional in any of the trades, because the market doesn't care about your emotions. It doesn't care whether you lost money or you made money. The market keeps on moving regardless of what happens to you and your account. So it's very important you protect your account at all costs, because at the end of the day, the market can't force you to take a trade and to over leverage your account. The market can never force you to do so. All the market can do is move either up or down or sideways, and it's up to you to take advantage of the market where you see it's fit in, for you to take that opportunity, if there's an opportunity there for you to take. So I'm just going to show you the strategy that I use, guys. It's a very, very, very simple strategy. So as you can see here, we have a two moving averages right here. We have a yellow moving average, which is a 200 exponential moving average, and we have a blue moving average, which is a 50 exponential moving average. We actually have a setup right here that I'm probably going to take, but because I'm currently in this trade right now, I'm just going to be monitoring this trade, because I am anticipating the market's going to come back up. I have other things in place why it's going to come back up there. If you want to learn more about that, feel free to click the link in the description down below to learn more about that. So it's a very simple strategy. When the 50 exponential moving average breaks and crosses below the 200 exponential moving average, then we wait for the market to pull back, and we wait for a signal, which is a red signal bar, right? So we've got a red signal right here. Then the next bar would enter for a sell. Our stops would be 5 pips above, so roughly around here. A bit lower than that. Let's have a look. Perfect. And our TPs will be the next low, which is this low right here, which is very, very doable. You're actually going to watch this come into play right now. So if the market pushes back, this level, I'm actually going to enter this trade once the market does so, if it lets me do it. Come on. All right, it's not letting me do it. Let's go into sell. Don't know why it's not letting me do it. That's a bit weird. But yeah, so if the market comes back to there, we can take that opportunity. But as you can see, the system is very, very simple. You can see it happening. It's actually happening live right now for you guys to see. So our stop loss will be here, our take profit will be here, and our TP will be right here. So if it pushes back up, I'll actually be taking some trades on this particular trade setup. I don't know why it's not letting me do that. No, that's a bit weird. Okay, right, so it's a very, very simple strategy, right? And that's just for selling opportunities. Now for buying opportunities, it's the same thing but the other way around. So first thing we're looking for is for the market to, for the 50 exponential moving average, which is the blue one, like so, to break and close above the 200 exponential moving average. Once it does so, we're looking for the market to pull back, you know, then we wait for a green signal. Once we get the green signal, we take a buy over here. So we take a buy over here, make this green so we know the difference. You know, our TPs is going to be at the most recent high, and our stop loss is going to be right at the bottom of this, 5 pips below it, just around 5 pips below it, so roughly around here or so, a bit lower than that. Yeah, and as you can see, risking 14 pips to make 44 pips. Yeah, very nice risk to reward ratio. So as you can see, on most of the trades that we actually have here, you would average out around, you know, 1 to 3 risk to reward. Sometimes we get a 1 to 11. I actually had that last week. Not every trade we're going to get such a good risk to reward, but once you start your trading journey, you will actually see that, you know, you have some really good setups that you can take to, you know, take advantage of and actually make some really good profit. Now on this trade right here, I'm gonna be managing this trade, and I'll get back to you guys once I've finished managing the trade and I've come out with 0 losses at all. Okay guys, we're back. Just closed the trades on gold that I took earlier. Like I said, you know, with the system that I use allows me to actually come out of trades without actually taking a loss. So if you guys can recall, the market was trading around this level right here, and I had some buys around here, and the market just my TPs just closed. Let's go into the history. So still came out with a profit of about £11,000 for the day. Not too bad on a trade that didn't actually work out. But currently I'm actually looking to short this market for other reasons. If you want to learn more, feel free to click the link in the description down below, and you'll be able to learn the full system that I use. That's only for students only, that's available for. So if you want to learn more, just feel free to click that link in the description down below. But like I said guys, you know, when you're in losing positions or your trade is a negative profit, you know, you have to you know, have the right mindset every time you enter a trade. And if you're risking the right amount on each trade, you shouldn't actually be worried that the trade will either come in or go against you. That shouldn't matter in the first place. So if you're taking the correct position sizing, you know that shouldn't phase you if you see your balance go, you know, minus or but if it goes positive, you know, it's fine. But that's why you have to be willing to risk only trades, risk the only certain amount that you're willing to lose on that particular trade. But luckily for you guys, with the system, if you do go ahead and get the system, with the system that I use, we actually avoid losing trades. Now that doesn't mean we don't ever take losses. It just simply means that if we take a losing trade, the very next trade we take is gonna be a winner, simply because the market moves in only 2 directions. It can only go up or down. That's it really. So, and we can basically exploit that to our benefit in order for us to still come out the market without losing a trade. Now let me just go on to this little, let's just get it up for you guys. Okay, so now if you just trade a system, you have a system, it doesn't matter, any system, right? You know, and you just, let's say for example you start a trading account, you know, you can, you know, with a very small amount of, let's say £100, you can really flip that account and really grow the account long term if you're disciplined, consistent, and you stick to the strategy that you've got, and let's say you're making a very small 3% a day, which is very achievable. Not to say every single day you will make 3%, but on average 3% is a very achievable return on your accounts. There's some days I make 5, 10, 20%, on really good days in the market. Sometimes you can, in a weekly basis, you can easily triple accounts if you're, the market gives you enough opportunities that you can take advantage of. So let's say you're doing 3% and you just do that for one whole year, so that's 365 days. Obviously we're going to use Monday to Friday only, and you don't withdraw anything from your profit you make. We'll use the calculator, and this is just $100. Now let's say you was to invest that. At the end of the year, you can still come out with $224,000 profit. Now that is only if you stick to the system. Now if you got emotional because you lost a trade, that's not going to benefit you long term, because you're already aware that if you have a 60%, or let's say you have a 50% win rate of a system, you already know 50% of the time you're going to be wrong. So you have to accept that loss and just take the next trade. So but luckily for you guys, the system that I have, you wouldn't have to go through that emotional side of trading, because even if you've got the system in place and you can still make money long term, we're all human, we do have emotions. Especially new traders, they can come into the market and lose a series of trades, and then risk a little bit more on another trade, and then end up blowing account which is not the goal. At the end of the day, you want to still keep your risk consistent and keep on using that trading plan. But like I said, with the system that I have, we will still be able to come out the market without, worst case, break even. Sometimes we end up with a profit. In this instant, I ended up with a profit of £11,000 or so. But with a very consistent trading system, you can still make a very huge amount of profit, compounding that account, and that's just with a very small investment of $100. If you started with $1,000, you end up making $1 million, I believe, by the end of the year. For a one whole year, I believe you end up making $1 million for the whole year. Look, there we go, roughly around 2 million. But this returns only comes to those who are disciplined, consistent, and they stick to the trading plan. You don't want to look at these numbers and think, oh, you can do this straight away. You have to actually stick to the plan in order for you to get those results. If you keep on risking 10% of your account on every single trade, that's chances are you're not going to hit that return on investment you're looking for. But if you're risking anywhere from 1% of your account or 2% of your account, then you have the potential to actually reach that goal that you're trying to achieve on your account. Okay guys, so if you guys enjoyed this video and you found this video very helpful, don't forget to subscribe, like the video, share the video, as I do post on a regular basis. And thanks for watching guys. That's Brian Mastermind signing out. Bye bye.